Welcome to csstudents.com, a learning portal for company secretary students. The Audit Committee plays an important role in corporate governance. Currently, the Audit Committee is mandatorily to be formed by all listed companies and certain unlisted companies. In this presentation, we would discuss certain basic concepts relating to Audit Committee and certain legal provisions as well. Let's understand the corporate structure first. Then, we will look at the positioning of the Audit Committee within that corporate structure. So, in the middle, we have the company, which is an artificial judicial person. Then shareholders, who actually are the beneficiaries of the company's business and assets. Then comes to the board of directors, who has the power and responsibility to run the company. The board of directors is responsible for taking all business decisions with regard to the company. The board makes the business strategy. Such strategy is implemented through the chief executive officer and other management team members of the company. The directors also have to discharge various statutory responsibilities, such as approving financial statements, statutory compliances, etc. They also have to keep looking for future growth opportunities for the company. Now let's try to divide the directors' responsibilities into two parts. First is to focus on business decisions, be it revenue growth, or capacity expansion, or exploring new business opportunities, or market expansion, or overseas opportunities. The board has to continuously focus on them. Second important function exercised by the board is to keep the internal control over company's activities. The basic objective of having internal control function is to ensure that company's operations are efficiently and effectively conducted. All company policies and procedures are being followed properly. Financial reporting is appropriately done. All applicable laws and regulations are complied with. The internal control system helps an organization to timely detect and prevent any fraud-like situation and protects the organization's resources, both physical assets, like machineries or properties, and other intangible assets, such as goodwill and reputation. Therefore, the board gets a big responsibility of running the business, as well as to ensure the appropriateness of the internal control. The whole idea of having Audit Committee revolves around this. As per the corporate governance principle, the board, as a whole, continues to discharge the dual function of running the business, as well as ensuring internal control. However, with the perspective of having more focus on internal control aspect, the board creates a subgroup of directors, which is called Audit Committee. The Audit Committee mainly oversees the internal control function of the organization. It reviews financial statements. It selects various auditors. It reviews their reports. It also looks after other governance-related matters within the organization. The whole idea of having Audit Committee is that one independent body, comprising certain directors of the company, is focusing only on internal control and governance-related aspects within the organization. History. Let's quickly look at the history of Audit Committee. Year 1939, the New York Stock Exchange first originates the concept of Audit Committee. Year 1973, the U.S. Securities and Exchange Commission first recommended that the publicly held companies need to establish audit committees composed of outside directors. Year 2000, concept of Audit Committee was introduced to listed companies via corporate governance under Clause 49 of the Listing Agreement. Year 2000, Audit Committee was introduced for certain unlisted public companies as well, in the form of Section 292A of the Companies Act 1956. Year 2014. Audit Committee continues to be part of the Companies Act 2013 under Section 177. Year 2015. Listing regulations replaced Clause 49 of the listing agreement and continue to keep it mandatory for listed companies to have an audit committee. Regulatory framework for audit committees. In India, the legal requirement of forming an audit committee comes mainly from two legislations. First is Section 177 of the Companies Act 2013. This section also needs to be read with Rule 6, 6A and 7 of the Companies Meeting of the Board and its powers, Rules, 2014. The second is Securities and Exchange Board of India, Listing Obligations and Disclosure Requirements, Regulations, 2015. Under the Companies Act 2013, Section 177 makes it mandatory for certain companies to constitute the audit committee. Let's first look at what all companies are required to constitute the audit committee. Subsection 1 of Section 177 says, "The Board of Directors of every listed company, and such other class of companies as may be prescribed, shall constitute the audit committee." This means all listed companies need to constitute an audit committee. Under the Companies Act, the term listed company is defined under Section 2, subsection 52. It says, listed company means a company which has any of its securities listed on any recognized stock exchange. So, it doesn't make a difference whether a company is a public company or a private company. The only test is that any security of that company is listed. As per the prevailing SEBI regulations, public companies can list their equity shares. Public companies can also list other convertible securities. They can also get their non-convertible debentures or preference shares listed. Private companies are not allowed to list their equity shares or convertible securities. However, private companies can list their privately placed non-convertible debentures or non-convertible preference shares on the stock exchanges. So, the question is whether a private company can be a listed company under the Companies Act. The answer is yes. If a private company lists its non-convertible debentures on the exchange, it shall be treated as listed company under the Companies Act, and will also have to form an audit committee. But there is a catch in the legal provisions pertaining to private companies, which we will discuss separately. The second category is a prescribed category of the companies. The Ministry of Corporate Affairs has prescribed such categories of companies under Rule 6 of the Companies Meeting of the Board and its powers, Rules, 2014. Rule 6 provides 3 categories. Means, if a company is covered in any one category, it will have to constitute the audit committee. Please note that it does not make a difference whether a company is a listed company or not. If it is covered under any of these 3 categories, it will have to form an audit committee. These categories are: first, all public companies with a paid-up capital of rupees 10 crores or more. Second, all public companies having turnover of rupees 100 crores or more. Third, all public companies having in aggregate outstanding loans or borrowings, or debentures, or deposits, exceeding 50 crore rupees or more. Now the question comes up, as on what date we need to check the capital, or turnover, or borrowings? The answer is given under the explanation. The explanation provides that the paid-up share capital, or turnover, or outstanding loans, or borrowings, or debentures, or deposits, as the case may be, as existing, on the date of last audited financial statements, shall be taken into account, for the purposes of this rule. Means, if during the year, share capital, or the turnover, or loans, or borrowings, have increased, and crossed the prescribed limits, the company need not form the audit committee immediately. But it will have time till the finalization of annual audited accounts with increased numbers. Means, if a company, having its paid-up capital as rupees 9 crores, as on March 31st, increases the same by additional rupees 2 crores in October, making the cumulative paid-up capital to rupees 11 crores. Such company is not required to form an audit committee in October. The company shall be required to form the audit committee when its annual accounts have been audited and financial statements have been approved by the board, which should be sometimes next year, typically in April, May or June. Similarly, for other categories, the company can cross the limit during the year. However, the requirement to form an audit committee shall kick in only upon finalization of the audited annual accounts with increased numbers of turnover or borrowings. Now, let's see the composition of the audit committee. Means, who all need to be part of the audit committee. As we discussed earlier, audit committee is a subset of the board of directors. So, only company directors can be part of the audit committee. Subsection 2 of Section 177 provides for composition of the audit committee. It says, the audit committee shall consist of a minimum of 3 directors, with independent directors forming a majority. So, composition is easy to understand. Need to have at least 3 directors as member of the audit committee, and independent directors should form the majority. Means, within the committee, the number of independent directors should always be higher than the non-independent directors. As per Section 149 of the Companies Act, listed public companies, as well as certain other class of public companies, are required to appoint independent directors. Therefore, those entities can form the audit committee, with majority independent directors being part of it. Initially, we discussed that the primary function of audit committee is to ensure the internal controls within the organization, which includes statutory and internal audit exercise, financial review, financial reporting, etc. So, it's more suited that rather than promoter or executive directors, the independent directors take the lead within the audit committee and put more focus on internal control aspect. This helps the organization to have an independent body to continue reviewing the functioning with the perspective of internal control. Further, the proviso of subsection 2 of Section 177 provides additional requirement. It says, provided that majority of audit committee members, including its chairperson, shall be persons with ability to read and understand the financial statements. As we know, one of the functions of audit committee is the examination of financial statements. Therefore, the law provides that the majority of members should have the ability to read and understand the financial statements. Now, let's quickly understand the lacuna with respect to private companies. Lacuna means a gap in the legal provisions. In earlier part of the presentation, we discussed that private companies can also list their privately placed debt securities. Therefore, they become listed companies. And as per Section 177, all listed companies are required to form an audit committee. and such audit committee needs to have majority of independent directors. However, as per Section 149, only public companies are required to appoint independent directors. Therefore, the question arises whether listed private companies can form their audit committees without independent directors, or they need to appoint independent directors just to comply the audit committee formation requirement under Section 177. The current Companies Act does not provide an answer to this. However, as proposed under the Companies Bill 2017, this will be corrected, and all listed companies, which are private, shall be exempted to form the audit committees. This is the end of the presentation. We will shortly publish the second part of the presentation on functions of the audit committee. Thank you for watching. Do click on the like button below the video. For more presentations, please subscribe to this channel.